How's it going, everyone? Welcome to the weekly trade review for the week of 4/28. So this week I took 3 trades. I had six trades, 4 wins and 2 scratches. Had a total profits of 282.82. Felt like a lot of 2s and 8s in that one. So another week of profits. So I'm 5 in a row. Happy with the progress and want to keep it going for the rest of Q2. 7 more weeks to go. Okay, so for the trades I took this week, I had 5-day trades and 1 swing. So I'm going to go into the swing first. Here's a setup this week on SPY. If you start on the 28th here, we had a bullish week, lots of major earnings coming out with mega cap tech earnings, as well as other big S&P 500 names that are not mega cap. Things like Airbnb came out. What else happened? Starbucks was one, and a whole bunch of others that I can't remember. Yeah, Take-Two, Roku, Spot had earnings, so a whole bunch of big marquee companies here. SPY was kind of chopping around this horizontal resistance around 550, broke through that, broke through the 50 SMA, and has continued upward. Now, this is a bullish move in the short term, but we can't forget about this very strong deep drop bearish move on the longer term horizon, which means that we can't swing trade yet until the short term and the long term start to line up. But we can keep day trading the long side. You'll see that all my trades this week have been longs. I'm not taking any shorts. I'm not trying to time the market here. I've gotten burned like that a couple times with those anticipatory trades. Instead, I am waiting for this bounce to stall. Maybe it'll stall here. I have this last pivot high at 576.41. So I think that'll be an important level. If we start to break through that, it's going to tell us that this bounce is pretty tall. But I would like to see this bounce start to stall up and maybe poke above it and then start to stall over here. And I do believe that we'll have a chance to revisit the downside on that bounce. So that's kind of the setup. Spot was the trade I took. So Spot, we had earnings on the 29th. It gapped down, it tested the 100 SMA, and then rallied up here on the 29th. So I took the Spot this is on Tuesday. I took the the May 2nd, 585, 595 CDS for 390. And that's the D1 setup. I'm going to go to the M5 setup here. All right. So I'll tell you what I saw in the trade and then what I kind of why I ended up scratching on this. So this trade was a nice move. It had pulled back. After testing, it had a nice head of steam and was rallying throughout the whole day. If you look at SPY on the 29th, had a bit of a rally here. But I love the volume and the price action on Spot, and it pulled back a little bit. So I took the CDS on the 29th on the notion that, look, Spot should be continuing higher, and the market, has been bullish. So I have a good chance to take some gains and have this really Spot fill in the gap over here. So that was a close. SPY gapped down overnight and had some selling. So let's look at this M5 chart. Yep, so we had this gap down overnight with some nice long red candles early in the day. And now you can see that Spot actually, it had a small gap down, tested this level right here, and then immediately, and I believe if I put an AVWAP on here, that was the prior day VWAP. Yep, all right, so touch that, prior day VWAP. Did I get the right one? I did. And then rallied off. Now, where I took the scratch was pretty much right around here. I took it at, pretty much in the first 15 minutes of the day. And the reason for that was this market had a big negative reaction to this GDP number and the PCE number. And that was the mistake I think I made on Spot, is for some reason, I did not realize that PCE and GDP were coming out tomorrow, even though it was in my calendar. Just did not clock in. So I'm not sure if I would have taken the trade in hindsight, but assume that I did. I saw this price action and I was like, well, okay, this could continue downwards, and spot is holding up pretty well, but how long will spot hold up before the market starts to tank more? So I was predicting the market to have a pretty decent bearish trend day, especially rejecting off of some D1 resistance at that time. Now, from that point, the market did end up rallying, and you can see how this stock soared. And my original profit target was this gap fill, which was around $6. So I would have actually probably gotten my fill somewhere around here. And then it kept on going and kept on going. So, I had a chance probably to stick with this position and take gains, but I kind of predicted the market wrong, and I wasn't really willing to let the stock go against me that much. So that's why I ended up cutting it. So I think I'm not super mad about the scratch because I'll take, I think I got like $5 on this. I got in at 390. I got out at 395. So got $5 on this, but I think I got the market wrong, and I wasn't willing to take that max loss on the CDS. So because of that, I forwent future reward and risk for an immediate scratch right now. I was really looking for some sort of pop-up overnight. That's what I was looking for. So that was spot. Let's get into the day trades. So I did not take any day trades on Monday. I think I'd come back from a wedding over the weekend. So Monday I was just kind of not doing a whole lot. I was catching up on work, and I was just looking at the market, just getting my bearings because I was also out last Wednesday and last Thursday. Did I get that right? Yes. So I had a shortened week. Oh, no, sorry, not last weekend. 2 weekends ago. Oops, let me get this right. No, I was right. Yeah, it was last weekend. So shortened week last weekend. So, basically taking my bearings. I was reminding myself about my technical reminders and saying, look, wait for your setup, wait for some sort of trend to emerge, and, just kind of remind yourself about what are the day-to-day decisions that you have to make. So, if I'll take a loss, I take a loss, but I'm not going to make a bad decision. All right, so that is, let's look at the 29th here. First day trade I took was CDNS. And let's look at this D1 chart first. I got to get rid of some of these AVWAPs here. All right, so here's CDNS. You can see nice post-earnings reaction. Nice little double top marginal new high, breaking above this level, getting into the gap over here. And I believed it had, testing this, had room to this gap fill around 300. So I like what I saw in the stock. It was a nice setup for a day trade, plenty of clear skies. And I am going to delete this because that is getting in the way. Okay. So this is the setup on CDNS. We got this nice move up higher. Test. Broke down over here. And then we got this. What I really liked about this is first we got this higher low relative to this pivot low right here. And we got this double bottom marginal new high right over here. So I took CDNS 75 shares at 297.94. And then I took that at 115. So yeah, so I took it right over here. If we look at what SPY was doing at 115, it was kind of grinding up. So I think I took it, I believe, right over here was the setup. So it was the close of the 110 candle. So here's basically what I got in. Now you'll say a couple things. First, it pulled back, but it had relative strength during this market decline, which is what I really liked. And it was a strong stock. It was a little choppy with strong stock. And I like this. I like that I was really close to support over here. See, there's a ton of support coming into play from 296 all the way down to 295. And my plan was, look, SPY's not really going to do a whole lot today, and we're pretty close to resistance. So I'm expecting to take, I don't know, if I can take gains like 290, like if I can take a dollar on this stock, I'll be pretty happy. So went over here, and then I think we got out at 145. Yeah, so I missed my target at missed my target by like a couple of cents. So I exited at 298.75 for an 80-cent gain over here. And this was, I believe it was, 145. So this is where I took gains on this position here. And I was pretty happy with that. Now you can obviously see that this stock really took off without me. If you look at what the market did, it actually had a little bit more follow through before it started to stall. So it's hard to say like, oh, maybe I should have taken, held on or something like that. But, I was pretty happy with just taking a win on a day like today and not really pushing it. And I'm in general not trying to push trades. So I do forego some of these bigger moves on the stock, but I trade that out for always getting a more guaranteed profit per trade, which is a little bit more common in these hit and run environments. So I'm trying not to let the idea of potential profits psych myself out. And then once I have, again, 20, 30 trades under my belt that I can review and see how I'm doing, then I can make an adjustment to see, okay, well, based on these trades and my walkaway analysis, should I hold it longer or should I not hold it longer? But for a single trade view, I'm not going to fret too much about that. I just took a nice win. Next day, that was the only trade I took on that day. Next day, I took a long on Starbucks. This was on 4:30. So Starbucks, negative reaction post-earning, and then had a bullish reaction to fill in the gap. So this is, if you're not a 75% win rate trader, this isn't a trade you should take because it doesn't quite have the D1 aligned. But here's what I saw in Starbucks. So this is one of the Saturns I like trading. I'm still playing around with the name, but the essential setup is you have a massive gap down in the stock, typically from earnings or major news, and that gap down is an overreaction. In intraday, you see a very, very strong and tight buying, persistent buying throughout the day, very, very heavy volume, and very, very organized price action. So that allows for some day trade opportunities to happen. So on Starbucks, you can see that it moved up here, and it was just kind of chopping around this whole day. It was just compressing, but on this compression, you can notice that it's slowly making higher lows. So this is setting up for a breakout and a retest. Now, I don't trade this until I get the breakout because that's much higher probability. If you trade it over here, there's a chance it pulls back and tests that VWAP over here. And in that case, I just rather get in at VWAP. So I don't take it right there. Now, it broke through the high of the day on this candle right over here. You can ignore this AVWAP candle because it wasn't there at the time. AVWAP was being set. So I went long 160 shares of Starbucks at 79.50 or 79.49, I believe. And my stop was somewhere over here, break below this VWAP over here, like 77.60, something like that. And I was targeting this prior day AVWAP. A lot of times on these trades, the prior day AVWAP will form some sort of resistance. So if you can get a nice structure on the trade, you can target that AVWAP. Again, pretty dead day on the day. Not really expecting a whole lot. So I figured if I can take 50 cents to prior day AVWAP, it's a good day. So I got in here at 1:30. We got some immediate confirmation, stacking greens. It got pretty close to my target. I was targeting 80 cents on the dot. I got to a high of 79.96, but I wasn't panicking because I knew that it will touch it. So I wasn't really fretting over here. At 1:30, where's 1:30? Here's the 1:30 bar. So this is where I took the trade on and the setup on both. And again, you can see how when SPY was dipping, spot was just compressing and slowly grinding up, making higher lows. So that's what we want to see. Okay. So over here, we got a news pop, and I think I took gains at 210 because I had a floating order out. So I took gains at $80 on this news pop, and that was that at 210? Yeah, 210. So this is where I took gains, and then spot pulled back for the rest of the day, kind of compressed here, but didn't quite get to that 80 again, and SPY kind of died and had this little end of day move. So that's a nice little quick win on spot. Again, it was just finding that right stock, waiting for, finding basically here's a move, here's a dip, finding relatively strong stocks on that dip, and then when this trend resumes, I get a nice little chunk of that trend, and I'm in and I'm out. All right, Next day, 5-1, gap up and tested this low, and then we started to move up a little bit higher. SMCI, another gap fill trade that I took. Similar setup. Post earnings reaction, gap down, really big gap down. I'm looking for these like 10% moves. And then stock just has a non-stop rally. That's what I want to see. Okay, so SMCI. Here we go. Here we go. Oh, this is that's the wrong one. There we go. All right. So I took this trade at 12.35. Here's the setup on SMCI. And again, grinding up higher lows and new high of the day, breaking out of this compression right over here on a nice medium-sized key bar, not a super long candle, so I can get long on this bar. Nice relative strength during this time. And what's the market doing? The market is declining. So once the market, where is this candle? So I took it at 12.35. Here's the market at 12.35. So it hasn't quite yet formed support. But what I'm seeing here is that we're stalling by the low of the day. And as long as this low of the day holds, I am good to stick with the trade, right? A lot of times with these gap up, you see a gap up and go, and then the pullback will be a test of this low of the day, and this is my line of the sand. Because if this low of the day breaks, we have a chance of trying to fill in the gap, even though there was a 50 SMA. That would be another little stopping point. But if that low of the day holds, then we'll start to grind higher on support. So that was the thesis for the trade, and the stock just kept grinding higher and higher and higher and higher all throughout the day. Until the very end, and this was an interesting warning sign. So typically, I was willing to take this and ride this up all the way to the 8 EMA, which was around $34. So it got pretty close there. Where is it? Right here. Yeah. So pretty much going to take profits somewhere around here, and it was just steadily grinding up. Now we did get this long red candle, but I wasn't super worried because we've had some red candles before, even a little dip here from the market, and then buyers have scooped it right back up. So we get this deeper dip, so I'm still not fretting, but I don't love it that much. We get this pulling back over here. We get a nice green candle, and this is some level of resistance over here, right? So I want to see it quickly get back above this resistance, and my entry is over here. So I have a good entry, and I have some cushion to manage the trade. And then when it doesn't, and it starts to poke below this low, this is when I get out of the trade. So I get in at 33.17. I'm long 430 shares at 33.17, and I get out at 33.29. So it was kind of sucks because I was like, I had like almost a 50-cent profit per share on this, which is a really nice win. But considering that the market was pretty dead, I figured that this had a pretty good chance of floating up higher, and these typically have some sort of acceleration towards the end. So that's the acceleration that I was waiting for. Didn't end up panning out. So I figured, you know what? I'm not going to let this become a scratch. I had some nice gains. Let me just take the gains and, still take the win because the win is a win, and avoided myself a lot of pain because that would have put me in the red, and I would have been scrambling to try to scratch out of this trade later in the day. You can see it came back up to test this level, but couldn't quite get there overnight. The other trade I took on this day was Netflix. So Netflix, super strong D1, very choppy stock. You see this overlap and retracement, which means you want to be buying dips in here and then selling into strength. That's the game plan on Netflix. So you don't want to be buying into these long red green candles. You want to wait, have it find support, and you want to start taking it after that support is confirmed. So Netflix, big rip up, pulling back here, and I love this pullback of just this weak bearish channel with lots of mixed overlapping candles, and it was holding this prior day high right over here at about 11.33. Now SPY again pulling back here, and as soon as I saw this long green candle at 1 o'clock, here's a SPY candle at 1 o'clock, right? I was like, all right, Netflix is setting up pretty well, and I think there's a good chance for this stock to get and test its high of the day. I'm not expecting a breakout, but I'll take a test. So after that, it pulls back, which is fine, and it forms a bit of a higher low. And I size it for a move to VWAP. So I'm taking 20 shares long at 11.3795. And I size it for a $5 gain, and I almost get that. If you look at this high, it's 11.3797, and this here it hits 11.41 Or did he get 11? Sorry, 11. Yes, so I was looking for $5. So basically, I missed my target by 2 cents, which kind of sucked. But I got this long green candle, and I figured that this has a good chance of getting retraced. So I just took gains at this long green candle at 1141.65, which was close to a almost a $5 gain per share. So pretty happy with Netflix. That was a nice winner for this week. And again, it just wasn't really pushing. Oh yeah, it was 1136. I just did that wrong, and it's important to point that out because when I got over here, let's see how choppy the stock is. There's a good chance that it's gonna be biting into this candle a little bit. So on this close over here, 1137.46, I felt I could bid a little bit lower and get a decent fill, and that's what happened. So, bid like 50 cents lower, got a little bit better fill. So that's just a little, little trade hack, I guess, on Netflix. So that was a nice win. So I took 2 wins on that day. That was a nice double win on Thursday. And then on Friday, I missed a couple of stocks like HIMS and COF were nice. I kind of ended up missing that. The stock I took was Roku. It's another gap fill or this big drop, overextended drop that starts to rally throughout the day. So I took that stock. It was looking pretty good, but it was, I'd say, an A- setup. So I took it right here. And you can see that at 2, it was about flat relative to the market at 2. Let me find SPY that day. So it was a good setup in terms of the organized price action, and in terms of a stock entry, it's nice. But in terms of the relative strength, it wasn't really quite there. So I had 1 foot on the break the entire time, and I wanted it to produce pretty quickly. I was happy with taking maybe 50 cents on this guy. And so I took 125 shares at 63.06, and I wanted to see SPY kind of break above the high of the day and move up higher. So I took it at 2. If you look over here on the SPY chart, SPY kind of compressed for like a couple of bars here. And then Roku also stalled for a couple of bars here. So I scratched out of the trade at 63.01. So 5 cent loss. That's a scratch to me because it wasn't really able to advance. Now, why was I weary of Roku, right? On paper, it looks like this is pretty nice intraday wise. The reason I did was mainly because if you look at this high, right? So let's see what the key that I look at is when did SPY pivot and when did the stock pivot, right? I want the stock to pivot after. I want it to pull back after SPY is starting to sell off and recover before SPY starts to recover, right? That's what I'm looking for. So if you look at SPY here, it starts after 12:35. So from 12:35 to 1:25, this is when it's starting to pull back. On this stock from 12:45, right, to 140, it pulls back. So it does pull back a little bit later, which is good, but it doesn't recover as much. And you can see also on this bearish candle here, it actually holds a good amount of those gains. And, it isn't actually able to immediately recover those gains or at least hold those gains. So the pullback wasn't super deep, but I wish instead of this recovering at 125, if it started recovering like 110 or 115, right, somewhere around here, if it started recovering here and gained some relative strength, I had a much better chance of actually getting to the high of the day and maybe even breaking above it. So because I was relatively flat, I didn't have as much cushion in terms of the institutional buying. So therefore, I had 1 foot on the brake and I decided to just scratch out of the trade, and ended up being a good decision. Had a big flush to VWAP and saved myself a lot of pain. So there you can see kind of the pros and cons, where in some cases staying in a trade longer would have resulted in a loss. In other cases, staying in a trade longer resulted in some greater wins. So you still have to kind of balance it out. But that's a scenario where, I might say, oh, I'm so smart for taking the short trade. But if I talk about my trade earlier with, something like CDNS, right, where I might be kicking myself for not holding it longer, you got to think about, well, why are the scenarios different here? And, what makes me stay in one trade versus not what makes me stay in another trade, and what can I carry over from trade to trade? All right. So that was it for today's video. Pretty quick stuff, but hope this was helpful. and we'll continue to track the progress throughout the week. So if you're struggling here, I'm just saying pick your spots. You only need 1 or 2 really good trades a day, and find stocks with nice price action, nice volume. There's going to be a lot of these stocks because of earnings, and there should be a lot of nice intraday plays that are available. And you don't even need to take advantage of all of them. You just need to take advantage of a couple of them to have a good week. So that's it for today's video. Thanks for watching, everyone, and I will see you all in the next video.